Howdy there, folks. Welcome into today's video. So we have one of the best investors ever, an investor that's gotten absolutely ridiculous returns over the years. This investor is buying heavily one stock in particular right now. And I want to share not just only what that stock is, but I want to share with you what I believe this investor is seeing in the stock and why they are aggressively adding the stock right now. And I think there's definitely some things they see there that I want to kind of go over so everybody understands kind of why this investor is making that move, in my personal opinion. Hope you guys enjoy this as always. Let me know if you enjoy a video like this where I go over an individual's moves like this, okay? So if you never heard of Stanley Druckenmiller, okay, Mr. Druckenmiller. So Stanley Druckenmiller is an American investor, hedge fund manager, and philanthropist. He is a former chairman and president of Druckenmiller Capital, I can never pronounce that right, which he founded in 1981. He closed the fund in August of 2010. So when I was kind of just starting to get rolling at the end of 08 and into 09, he was getting ready to close up shop essentially. At the closing, they had over $12 billion of assets. From 1988 to 2000, he managed money for George Soros, which some of you might know, as a lead portfolio manager for Quantum Fund. He is reported to have made $260 million in 2008 alone. Holy smokers, that ain't no dang jokers, okay? When you're talking about, managing money for George Soros, yeah, you know a couple things. Let's just put it that way, okay? You know a few things, okay? Now, from what I see, Stanley Druckenmiller got these ridiculous returns of like 30% plus for a long time, from like 1986 to 2010, from what I have seen out there, which is absolutely incredible, okay? And so Druckenmiller kind of took a step back, but he currently manages some money for the family office, okay? And this family office, they have to disclose kind of what they're up to essentially, because they have a lot of money. Let's just put it that way. And I mean a lot of money. How much money are you wondering? Well, this much money. Right now, the portfolio value of what they have invested, just in this family office essentially, okay, is close to $1.4 billion, okay? Close to 1.4. This is just a family office they have set up, okay? So nonetheless, when you're talking about that sort of money, you're going to have to disclose like what you're out there doing and whatnot, right? So if you got $1.4 million out there in a portfolio, no one blinks an eye. You got $1.4 billion you're managing, is a whole different situation, okay? Now, what is the stock they're loading up on right now and what they're kind of up to here? And I'll give my opinion on what I think they are seeing in this company and why I believe they're buying so heavily right now, okay? Well, the company is none other than Palantir. So they are up to 4.26 million shares as of last quarter. Now, they could have also continued to add, maybe they're at 5 million shares. We don't know as of right now, okay? But as of last reported here, what came out, 4.26 million shares. There was an addition of 27% more shares they added here, essentially, which is a very aggressive move. Now, meanwhile, Druckenmiller was actually cashing out of a lot of other stocks during the last quarter, including stocks like Chevron, which, oil and gas stocks last quarter were going insane. So he cashed out a bunch of shares there. He cashed out of some Mr. Softy. He cashed out of some Freeport McMoran, which is commodities related. And but there he was. Something he definitely wasn't cashing out of, and he was adding aggressively, was Palantir. So he's got a big position now in Palantir. 4.26 million shares of Palantir is a pretty darn big number, okay? Now, this is out of Investor's Place here. According to the latest Form 13F, Druckenmiller's family office basically upped their Palantir position. Specifically, the firm grew its position by more than 27% to 4.26 million. That made it a top 10 holding in their portfolio. It's not Druckenmiller's first notable increase to stock either. In May, when they had to do their Form 13F, it showed that the firm had more than doubled its position in Palantir stock. That's quite a bit of confidence coming from Druckenmiller and Co., considering how poorly the market has behaved in the first half of this year. So essentially, first quarter and second quarter, they're adding very aggressive Palantir shares. Now, if I had to guess, I would assume in the third quarter here, they're adding likely Palantir shares quite aggressively as well. That's just my guess. Like if you're adding in Q1, you're adding Q2, you're probably adding here, let's call it, when it's in the gulag at $7 or so, okay? Druckenmiller is a legendary fund manager. However, his cost basis, according to Investors Place here, is roughly $18 a share, Wow. Okay. So, I mean, we're talking about if, that's a high number. Now, he can, if he continues to buy shares and adds to, 5 million shares, 6 million shares, 7 million shares, he can continue to get that cost basis down to maybe, $17, $16, $15. But nonetheless, that's a very high cost basis. Here's the deal. Palantir stock right now is about $7.50. It's in the gulag right now. Okay. Basically, Druckenmiller would need the stock to go up roughly 150% just to break even on the stock. So the fact that he's adding so considerably here, he has to feel like there's definitely let's call it some pretty darn big upside. And when you talk about an individual that managed to get the type of returns, and I'm going to share with you exactly why I believe he's investing so heavily in Palantir right now. When you're talking about an individual that got those sorts of returns for a long time, when we start talking about over 20% returns, and then you start talking about over 30% returns, that it's basically shown that he got for that extended period of time, you have to be willing to take some risk in some stocks. And you have to be willing to invest in some companies that are getting absolutely obliterated in the short term, because those are usually where you're going to find your most insane opportunities. If we look at every single stock in the stock market that is a super respected stock nowadays, from the Teslas to the Apples to the Microsoft to Amazon to Google to Meta, Nvidia, AMD, you go through every single one of those companies. They had some really tough times with their stock prices and their business models. In AMD and Apple's case, there was a thought process, and even Tesla, there was thought processes that those companies were going to go out of business. So the fact is, every single company you really respect, they had to go through it, man. To get to climb to the top, they had to go through it. Amazon, not a lot of people know this. Amazon in the tech bubble crashed over 90%. Over 90%. Not a lot of people know that unless they're very well versed in their history in the stock market, okay? So every single company, if you want to rise to become a big dog, a $100 billion company, multi-hundred billion, or dare I say $1 trillion, you got to go through it at some point in time. In Palantir, they're going through it right now, man. And that's how they got to the gulag of $7, okay? Now, what do I think Druckenmiller is looking at here? What do I think this gentleman sees with Palantir, and why is he adding this stock so aggressively? Well, here's what I think he sees right now, okay? The first thing is, I think he's looking at a business model that is pretty darn rare. You don't get business models that are usually very big in government and have incredible potential in the commercial space as well. And so I think he's looking at a business model that he's looking at here, and he's like, this is kind of a thing of beauty here. I'm getting this company that, on the government side, just going to continue to grow bigger and bigger in future years. And on the commercial side, that's like an untapped opportunity. They're barely starting to even get into the commercial space. Like, this is like early days for them in commercial. So I think he's looking at that from a perspective of this adds good diversification to the business and multiple growth vectors for this company, where let's say at a particular time commercial is really slow, government can pick up the slack. Let's say at another particular time commercial is doing great, and maybe government's falling off a little bit. So that makes it a pretty special business model, because very few, it's either usually you're kind of on the government side or you're on the commercial side. It's not usually you're playing both sides, okay? I think he's looking at a company that continues to innovate and come out with incredible products because they have an incredible employee force at the company, which, if you just look at the different products they've come out with over the past, let's call it year or two, I mean, it's pretty darn impressive, and especially when you look at what these products can do. And so when you have a special workforce like Palantir has, you are able to create some incredibly impressive products. And I know a lot of people hate the whole stock-based compensation thing and things like that, and that's going to become less of an issue in 23 and beyond. But it's clear they've attracted some of the most impressive talent out there, just bottom line, okay? No, I think he's also looking at a company that just grew their customer count 80% year over year, okay? And when it comes to Palantir, it's not that they're just adding customers to add customers, right? When Palantir adds a new customer, it is a huge deal. Because, when Palantir adds a customer, you could be talking about contracts that are 8 figures, 9 figures, maybe even 10 figures. It depends on the situation, okay? But, we're talking about massive, colossal Colossal contracts. This is no situation where they add a customer who brings in like 50,000 a year or something like that, or 20,000 a year. No, it's not Palantir. That's not who they're going after. Maybe someday that's a customer they're chasing, but it's not in terms of it. So this is not this is a company that when you see them add a new 20, 50 customers, it's a huge deal. It's not like that's just like, oh, well, they only added 30 new customers. What's the big deal about that? No, it's a huge deal because these dollar amounts are massive, okay? I think he's looking at a company here that he's looking at their average revenue for the top 20 customers. Average revenue is $46 million. Average revenue per the top 20 customers. That's incredible. How many other business models in any space, especially in this sort of space, right, have that sort of average revenue? That's incredible, okay? That's absolutely incredible. And that means their big dog companies spend money with them. And I'm talking big, big money, okay? I think he's looking at a company here with adjusted gross margins of 80% plus, which when you start talking about those sorts of margins, right, you're going to be looking at an incredibly profitable business model. When it comes to these sorts of business models, they have to go through this kind of, growing up phase. It's very, let's call it awkward. And you got all the stock-based compensation. You got all these one-time freaky expenses and things like that hurt your bottom line, okay? But at the end of the day, if you're talking about adjusted gross margins of 80% plus, and they can continue that on in future years, this is going to build into an incredibly profitable company, an incredibly, massive cash flow machine. It's just going to be a cash flow register in future years. And so I think he's looking at that sort of company that he's looking at, and it's like, wow, I get it for this cheap. These sorts of companies that are talking about adjusted gross margins of 80% plus, it doesn't just happen all the time, okay? I think he's looking at a company that's building out incredibly impressive in the commercial space. If you look at their commercial revenue year over year, we're talking about 46% in the past quarter. The previous quarter was 54%. So they're putting up incredible numbers in the commercial side. But it's always important to kind of look at the details of where this commercial revenue is really coming from in terms of the rise. And if you're going to think about where do you really want to see your revenue going up a lot in the commercial side, you really want to see in the United States. Let's not fool ourselves. Like, that's always going to be the biggest opportunity for a business like a Palantir. It's always going to be the United States. International is great, and this company should be successful international over time. But the fact is, you really want to see the numbers in the United States. And so I think he's looking at a company here where U.S. commercial, it grew 90% in Q2 2021, 103% revenue grew in U.S. commercial. In Q3 2021, Q4, 132%. Then Q1 of this year, 136%. And Q2 of this year, 120%. So I think he's looking at a business model here that continues to grow at just a ridiculous pace, quarter after quarter after quarter in the United States. And to be quite frank, who is even a remote competitor of Palantir? That's a whole question in itself. But if you're going to consider anybody a competitor, who's growing U.S. commercial at clips of 120, 130%? Good luck trying to find those companies. They're pretty much non-existent. It's incredible numbers this company's putting up, okay? And so I think that's what he's looking at, where it's like, this is a margin machine, this is going to build into a cash flow machine, and they're becoming more and more relevant in the U.S. commercial space day by day by day. I think he's also looking at this company, and he's like, the balance sheet's incredible. So if we're in any sort of weak economic environment for the next year or two, which is debatable, but let's say that happens, they're in a great cash position. No companies can say that. This company can't say that. They have roughly $2.4 billion in cash. They have no debt. They have $950 million credit facility out there. So I think he's looking at this from two angles, in my opinion, when it comes to kind of their balance sheet. I think he's probably looking at this from the perspective of it gives them safety if we go through tough economic times for the next year or two, and Palantir has to keep taking losses on the bottom line, which they likely will on the bottom line, right? I think it could also be looking at this as maybe there's a potential deal up Palantir's sleeve, maybe an acquisition of some kind. Now, Alex Karp doesn't seem like the most, let's call it the guy that would be most interested in making $1 billion acquisition or something like that. I just know kind of his type and that sort of approach that comes from an Alex Karp, but you never know, okay? And so the company's in a great cash position if they want to buy out a company, which the valuations of basically every single company in the world have come down immensely. Look at the stock market. What do we see? We see valuations on companies that have fallen anywhere from 25% to 80, 90%. Like literally, that's what we've watched play out. So basically, if Palantir was to make any sort of buyout or whatnot, right, of another company that could help them increase revenues and their bottom line impressively over the coming years, they're going to be able to pick them up for just a much cheaper price than you basically would in any sort of economic environment. In recessions, in crashes, in bear markets, things like that, assets get incredibly cheap, way cheaper than you ever thought you could get them. And so Palantir's in a great position that if they decide to go that route, they can go that route. And if not, that's fine as well. They're just in a great capital position. As far as, this is a stock that I just started buying here recently. As far as my perspective on this, I don't think Palantir needs to buy anybody. If they got some ingenious acquisition up their sleeves, cool. But I don't think they need to buy anybody. I'm looking at Palantir's growth for the next 5-10 years, and I think the world is theirs, especially when it comes to U.S. commercial and commercial business in general. So I don't think they need to do any sort of acquisition. I would be more than happy if this company just stays focused on what they're doing and keeps all this money on their balance sheet to get through the rainy days of, let's just call it negative net income. That's perfectly fine with me. Perfectly fine with me. But if they got something up their sleeves that's ingenious, hey, I'm open to that, okay? So I think he's looking at all this. And then he's looking at it from the perspective of you're paying, let's say recently it's been under $20 billion. Here today it's $15 billion for the entire company. A company that once again has $2.4 billion of cash and no debt on the balance sheet. So truly, what are you really paying for this company? If you buy Palantir stock right now, $7.49, you're really paying about $13 billion for this entire business. Now you can say, well, if they issue more shares over time, maybe you're paying a little more than $13 billion. Maybe you're paying $13.5 billion or $14 billion. Fair play, okay? But regardless, like it's a very low number when you consider that this company's likely on a trajectory to grow to, let's call it $10 billion plus in revenue before the end of this decade. And the big question is it like 2026, 2027, or 2028 that they cross the $10 billion mark? I think that's definitely very doable for this company over the next, let's call it 5 or 10 years. So when you look at it from all that perspective and you're getting this company for this sort of price, the risk reward is pretty darn tremendous. There's a lot of stocks that are obviously very discounted right now, and there's a lot of great risk rewards standpoints for a lot of stocks. But gosh, Palantir is quite an impressive one. And at the end of the day, this company will trade at a huge premium to the market. That's what these sorts of companies do over time, okay? And especially as they get better at storytelling, Alex Karp understands more and more over the coming, months and years about what it means to run a public company and how to be a CEO of a public company and be able to communicate with Wall Street and big money. He's going to get better at those things. I'm convinced of that, okay? It's a learning process. When you're a private company, you can say what you want, you can be how you want. When you're a public company, you've got to start changing your ways, and you got to do things a little more the way they want it done, at least as far as let's call it commentary and things like that. You can still run your business how you want, but you've got to adapt to the commentary side, and that's always just very, very important, guys. So yeah, Palantir, Druckenmiller's buying it heavy. I would love to hear your guys' opinion in the comment section as always. And also, if you're looking to join us in my private stock group, in the private Discord chat, and join us in the Palantir chat, feel free to do so. That will be that'll be linked in the description area. So if you want to apply to join us in the private stock group and join us in the Palantir chat and everything like that, check out the description area. There will be a link down there where you can apply for that. Much love as always, and have a great day.